What's going on, guys? It's Scottie Rapp here, FFL exclusive, top producer training for you guys today. So today we're going to be going over the sales process 101, how to cement the sale. And I'm going to be going over my process on how I properly protect a client from A to Z. This is my full presentation, what I do on every phone call and the process to a T. So I'm going to jump right into it, guys. I suggest you take notes. There's going to be some hints and tricks that I'm going to throw in there that I'm going to show you guys exactly how to add value, exactly how to do financial inventory, exactly how to pick a product, and exactly how to recommend the right deal and close the deal as well with a submitted application, and also making the effective date as soon as possible. So welcome to the training, guys. So basically, guys, when you get into a presentation, right, you want to have your first point of contact be very direct. You want to sit up in your chair if you're doing telesales, and you basically want to be very straightforward with the client right off the bat. Okay, so right off the bat, you're going to basically take control right away. So, first thing you're going to do, right, is you get on the phone. And this is the intro that I use for final expense clients. Okay. So, say we're going to call Mary here. She filled out a final expense form. She's looking for burial coverage. This is the exact intro that I'm going to use on the phone right when she answers. So, I'll be like, hey, Mary, this is William Rapp. We're reaching out from the final expense office. We received that request you sent in for the funeral and final expense burial coverage. Date of birth listed down was 1/20/1960. Is that correct for you? Boom. Going to validate information right away. Obviously, if that's her birthday, she's going to agree to that. This isn't a rebuttal training. I have another video for that on YouTube. So if you're struggling with rebuttals, go over there on the YouTube FFL exclusive and you can watch the rebuttal training next. So basically, hey, Mary, this is William Rapp. We're reaching out from the final expense office. We received that request you sent over to us for the funeral and final expense burial coverage. You listed down date of birth here as 1/20/1960. Is that correct? Boom. She's going to say yes. You're going to say, perfect. My name is William. I'll be the one processing your request and going over your options with you. Go ahead and grab a pen and paper for me. That way I can give you my license credentials first, and then we'll go over the concerns that you had. I say that word for word. So that's basically the first part of my script. And then basically just to kind of get more into that, I give a direct command. So first thing I'll have you do, Mary, grab a pen and a piece of paper. That way I can give you my license credentials, and then we'll go over the concerns that you had. Let me know when you're ready. Just like that. Okay. Once they grab the pen and paper, before they can even blink, guys, you're going to want to send your postcard, your flyer with your picture on it, and also a copy of your state license right away. No questions asked. While she's grabbing that pen and paper, before she's already back on the phone with you, you should be sending two text messages out. The flyer with your picture, she can see you, visualize you, put a face to a name, and then you should also have your state license right there. So once they grab that pen and paper, you're gonna have them write down your information first. So Mary, write down my first name. It's William. Last name is Rapp, RAPP. You're gonna have them write down your national producer number. You're gonna have them then write down your phone number. Mary, this is my office cell, so you have direct contact with me in case you need to reach out. Okay, so have them write down those three things: first name, last name, license number, and your point of contact, your phone number, whichever phone or system that you're using, the number coded to that. And then you're going to say, okay, Mary, go ahead and check your text messages now. I just sent you over a copy of my postcard and also a copy of my state license. Okay. Those are the two things you're going to say, and you're going to walk them through how to pull that up. So they see your face, they see your license, and they're like, oh, yeah, I got it. I see you right here. That's the connection you need to make. Very crucial in the intro process. You need to make that initial connection, because when you get to social, when you get to banking, the less rebuttals you have then come from how well you do these little things in the beginning. So make sure that, you're doing these things, writing down all information, having them look at your picture and then your license as well. Okay. Now, basically from there, you're going to get right into the power questions. You're not going to waste any time. So first question you're going to ask is, now, Mary, is this coverage going to be for you or you and a spouse as well? Perfect. And next question I ask is, are you currently working full time, retired, or on Social Security? And then obviously, like, they're going to answer those questions and you're just taking notes. You're building a case, and this is where you're starting. Next thing you're going to say is, now, Mary, are you the decision maker here, or does anyone else need to be involved in the decision making process? Very important question, because later down the road, when you show Mary 3 plans, you don't want her to say, oh, I have to talk to my brother. Oh, I have to talk to my kids. You're going to nip this in the bud right here by asking, now, are you the decision maker here, Mary, or does anyone else need to be involved in the decision making process? If someone else is involved in the decision making process, I'll go through the whole process. But when it gets to like showing options and giving pricing, I'm going to circle back to this and see if we can get that individual on the phone, or if she's comfortable at that point, because I built so much rapport with just making the decision on her own. Okay. So you're going to validate her info one more time. So, Mary, just to make sure, and this is how you stay in control, guys. Validate info, date of birth, email, address. Mary, you're still at the 123 Main Street, right? That's the address you listed with us. Perfect. Is there an apartment number there or no? These are just little questions that you want to ask throughout the conversation to keep her mind, occupied. Okay. So those are those questions. And then the golden question here, guys. This is the golden question in the process of the sale. This is how you're going to find the money. Okay. Finding the money means we can protect money, we can grow assets, and we can help people also with the simple retirement side of things. But you also want to know what else they have that's going to act like insurance, that's going to act like final expense planning, that is going to pay out to their family in the event that they pass away. Okay. So I always ask this right away after I do the first couple questions. I say, now, as of currently, Mary, do you have any life insurance, any final expense coverage, or anything that acts like life insurance that would be transferable if you passed away to cover and manage the risk in your estate, such as a 401k, IRA, stocks, bonds, mutual funds, or CDs? And you're going to gather this type of information. You're not going to bring anything up, but you're going to maybe revisit that later when it's time to talk about, I have this 401k or I have this IRA. I don't know what to do with it. That's when we can transition into the simple retirement side. And that's also going to make you better suited to give the proper recommendation from a final expense standpoint, if you know what else is paying out based on what you're covering and protecting. So next thing here is the intake process. So once you've gathered those details, guys, you're going to go right into the intake process, which I say just like this. Now, Mary, let me bring you through my intake process. It's a couple quick medical questions. I work with over 47 different A+ rated companies here in the state for final expense, mortgage protection, all different types of carriers. I typically do all the shopping for my clients to find the best option based on what you're looking to protect and cover, what you can qualify for, and something that's obviously in your budget. Just have to find which companies will approve you. That's where the medical questions come in. So we're going to get into those now. Okay. And so there you're building credibility, right? Mary, I work with over 47 different A-rated companies. I'm the guy you want to do all the shopping with. I do all the shopping for my clients. Why? Because I work with all the carriers in the nation. You don't need to do any more shopping. And that's how you get rid of the rebuttal, like, oh, I'm going to keep looking. Like, you can look through me because I work with all the companies. So that's why I do all the shopping for my clients, Mary. There's really going to be no need to look anywhere else because I have all the best A-rated carriers here that we're contracted with, right? So you're going to build that rapport. You're going to build that stature in the time of the presentation. And then you're going to tell her exactly what's about to happen. Okay. So that's the next part. Mary, once we find a good option, something that makes sense, we'll go ahead and submit an application to see if we can at least get you approved. Again, you do have to qualify. From there, if you do get approved and everything goes well, you'll be getting a policy packet in the mail in the next 7 to 14 days, and I'll be your insurance agent moving forward. And this is where you want to elaborate where your referrals are going to come in down the road. Mary, I do retirement, simple retirement planning. I do life insurance. I do mortgage protection. I do final expense planning. I pretty much do everything when it comes to insurance. And like I said, I work with over 47 different A+ rated companies here in the state. So if there's ever an insurance need, Mary, or someone at the kitchen table at Thanksgiving, is asking, I need to get my life insurance set up, or they're looking for options, you always have me in your back pocket here. You can always refer me to a friend or family or coworker, whatever the case may be. That's the type of rapport you want to build with your client, right? Because you want them to know that you're a professional. You represent great companies. You're educated on the process, and you're being the director in the orchestra here, right? If they get on the phone with us, they're looking for direction, they're looking for structure. They want to get this in place. It's just the fact of like structuring and wording the conversation and doing your job the right way, and just talking with the right confidence that's going to make them feel comfortable and move into a decision state. That's where you want to get them as a decision maker, in the place where they're ready to move on something. Okay. So this is the beginning stages of how you build that. So next thing here is the medical inventory. So Mary, you just go through this quickly. Mary, any history of heart attack, stroke, TIA, cancer, stents, diabetes, neuropathy, high blood pressure, depression, so on and so forth. Okay. You're going to gather all of the medical data that you need, because that's going to determine which company you can write Mary with. Okay. If you have questions on which one to go with because of the medical responses, go ahead and plug that into the Genie in Slack. They're going to be able to recommend the right plan for you. And that's that. So next thing you do, right? This is probably one of the more important pieces of the actual sales process. So basically, when you get to this point, okay, you've done your intro, you've done the medical questions, you know if they're working full time, they told you they're the decision maker, you explain the process, right? Now you're going into like the middle part of the sales process where we now have to start adding value and painting the picture. Okay. So this is the step where it's like identifying the 3 reasons why people even do insurance in the first place. Okay. So you're going to say this to Mary. Now, Mary, my clients typically put the request in for this type of coverage for one of 3 reasons here, Mary. Most people, they're just concerned about covering funeral and final expenses for their beneficiaries, making sure the financial burden falls on the insurance company and doesn't fall on your family. Mary, we want, the insurance company to write the check when you pass away, not anybody in your family, not your kids, not your husband, not your coworkers, definitely no GoFundMe's or donations that they'd have to raise to bury you. Mary, we want the insurance company to bear all that risk. Okay. So we want them to be the ones writing the check when you pass, covering these expenses, not your family. Do you agree? Right. So that's usually reason number 1, Mary. Most of my clients, they just want coverage for that one reason. Okay. The next thing we want to look to cover is any outstanding debt that might roll over to your family when you pass, such as a mortgage, rent, any bills that would be left in the household that your family or beneficiaries would be responsible for paying for on your behalf. Okay. That's usually reason number 2, Mary. So you're going to say that. You're going to say these words. That's reason number 2. And then reason number 3 here is typically to replace a spouse's income. For anyone that's financially dependent on you in the household, this is called income replacement. Basically, it's going to alleviate any financial stress and make sure that the household stays in good order you know, if something were to happen to you and anyone in the household is dependent on your income right now. And, you know, for legacy purposes or for legacy purposes. Okay. So that's reason number three, Mary. And then you're going to take your time here. You're not going to rush through this. You're going to say, now, out of these three reasons, Mary, what was your main concern? Okay. So you're going to identify this. Well, she's going to say, oh, yeah, it was just to cover final expenses. And I don't really have much debt, but, you know, so and so passed away 6 months ago and their funeral cost like 22,000. And this is where you're going to be able to um, you know, find other areas to cover throughout the process, because it's not just the fact of, you know, covering the funeral. Obviously, a real good insurance professional is going to find things outside of final expenses as well that need to be covered that they didn't actually, the client didn't actually think of right away until you brought it up. So just keep that in mind. So the three reasons why: most people just worried about covering funeral and final expenses. Other people, you know, concerned about covering any large loans or any debt, mortgages that might pass over to the family if you were to pass. And then the third reason here is to replace an income for someone in the household that is financially dependent on you right now or for legacy purposes. Okay. So identify what that is looking like for the client, and then you're going to jump into the financial inventory piece. So basically from here, what I say is, okay, so now that we have a good standing of health background and what we're protecting, let's touch base on the household side of things, which is budget, finances, so I can make sure I place you in the most appropriate way possible. Okay. And the first thing I always ask, this is how I do it. Other people might do it differently, but this is my financial inventory process. I always ask, how much is rent per month? So I'm telling them, like, we're about to go through your budget, we're about to go through finances. So first thing is, how much is rent per month? Okay. And they're gonna tell you like $1,000 a month, right? And then any other major bills on a month-to-month basis, Mary? And she's gonna tell you her bills, the car note's 200, the phone bill's $60, and so on and so forth. Now, as far as SSI, say like in the beginning, you know, you already asked in the beginning, are you working on Social Security or are you on unemployment, you know, or retired? This is where you're going to come back to this now. So, how much is rent per month? Get the bills down on paper and see how much she has in bills. Then the last part of that is you ask about income and like what the SSI looks like. Okay, Mary, you mentioned to me that you get Social Security, correct? Social Security income, SSI, SSDI, which is Social Security disability income. First thing you're going to ask is, now, do you get that on the first, the third, or the third Wednesday, Mary? So you know when she gets her check. And then you're also going to say, how much are they giving you, would you say, monthly ballpark for Social Security right now? And she's going to tell you 1,700 or 2,300, whatever the case may be. Okay. This is where you get to identify what the bills look like in the household and then also what the income looks like. Okay. So you're going to identify these things. You're also going to ask the very important question as well, which is going to determine which application you can write, which carrier and product you can write, which is, now, does the Social Security, Mary, do you get that on a Direct Express MasterCard or does it go into a bank account? Just ask it quickly, get your answer, because, you know, if they don't have a bank account, only Direct Express, you can only write certain companies like Prosperity, AIG, Transamerica, only companies that, as of this recording, accept Direct Express or a debit or a credit card, I think. So every other carrier, you know, requires an active routing and account number. Some carriers, they don't accept Chime banks, just so you know, like Americo, they don't accept Chime. I always ask too, like, is this a Chime bank? No, right? So if it's not, you're good. So basically, you're gonna keep it pushing from there. Once you get that, you don't want to keep their mind stuck on like, is, you know, asking bank account questions too much yet. You just want to get the answer that you're looking for. So paint the picture around what's missing in the household. You know, who else is in the house? Is there kids in the house? Is there a spouse in the house? And basically, like, for example, right, if Mary's 62 and she has, her granddaughter living in the house, and then also her spouse living in the house, and her spouse, they're paying the mortgage together. Okay, say the mortgage, is $1,500 a month, right? So basically, you're gonna find one of a few things in the financial inventory. You're gonna make sure that, okay, Mary, are we gonna do a cremation or a funeral here? Which one have you decided on? If you're doing a cremation, a cremation only costs $3 to $5, 3 to 5,000 we can do in coverage if that's all they're concerned about covering. That's all they need coverage for. The funeral, however, we usually recommend, Mary, a 10, 15, 20, or $25,000 plan. Just for that, that's what it's going to cost when you pass away, when your family goes to the funeral home, right? That's usually around the average cost of a funeral. And again, we want to make sure the insurance company, they're the ones writing the check, nobody in your family. Matter of fact, Mary, if you were to pass away tomorrow, do you think your family would have 15 or $20,000 like in the savings account to write the funeral home a check? And you could say this to her so she understands, like, no, they don't. Yeah, Mary, what happens a lot of the time is, people will actually have to go in debt with the funeral home and have another loan with the funeral home. And that's the last thing we would want for your family. So, Mary, right away, we're gonna need $15,000 to $20,000 just to cover funeral costs. And you just told me that the mortgage is about $1,500 a month, for example. So basically, if you pass away, Mary, and you're the one contributing to the mortgage with your husband or spouse, we're going to need to replace your income, because if the mortgage is $1,500 a month and you pass, now your husband, he has to figure out a way, right, to make up for your loss in household income and maintain that mortgage payment, right, Mary? Or what's going to happen to the house? So he's going to sell the house. Do you wish that he would stay in the house? You mentioned your granddaughter's living in the house. Let's make sure that mortgage is protected for at least 12 to 36 months. That's usually the time frame for my clients, to make sure that, we're doing equity protection, right? So equity protection is where you take the monthly mortgage payment, right? You times it by 12, right? And then you're going to either protect the mortgage for 12 to 36 months. Okay, so if you do $1,500 a month times 12 months, that's $18,000 for the year that Mary and her husband pay for their mortgage. So now, right, get this. She told you that she only needed funeral and final expense coverage. That's what she said to you. But you just found another need for insurance in the household because the granddaughter lives in the house, and that the husband, he needs income replacement for his spouse. Okay, because if she passes away, you know we have to make sure the check is getting written from somewhere. The money has to come from somewhere if there's a loss in the household. Protecting your clients all comes from what is being lost in the household and who is left with the burden. That's what it comes down to. You have to paint this picture with the clients. And during this process of the financial inventory, guys, there's usually one of a few things. So you either find the mortgage, you can even do that with the rent. Say it wasn't even a mortgage, say it was a $800 a month rent bill, but there was multiple people in the house and Mary was the one paying the bills. Well, we would take that monthly rent and we would apply the same strategy there. Okay. So either way, living situation wise, standard of living has to be maintained, or the granddaughter's going to have to go to the juvenile center, or um, homeless shelter. Make them think about the reality. Maybe her husband has no income. So what's going to happen to your husband, Mary, when you pass? if you're the breadwinner in the household and you're bringing in all the money. Okay. So you can do this with mortgage or rent, or you can just simply replace the spouse's income. So if Mary brings in $1,000 a month, for example, from Social Security, and her beneficiary is going to be her husband, same rules apply, only we're going to take that $1,000 a month, times it by 12 months. That's 12,000 for the year. So now, instead of just selling her or helping her with a $15,000 whole life plan that's going to cover final expenses, we just added on 2 years of income replacement, which 12,000 times 2 years is 24,000. Now, instead of a $15,000 plan, she knows she needs 40,000 in coverage, and if her budget allows it, that's a way to increase, obviously, your your value adding, right? Building rapport, showing them that, the things that they didn't necessarily understand at first, they needed an insurance professional to break down to them, right? So this is how you add extra premium in the household. This is how you get your numbers higher. Not that it's about that. It's about a bigger check paying out to the family because there's more need in the household. Sometimes they don't live with anybody. Sometimes there's nobody left in the house. Sometimes it's just their brother that's taking care of their cremation. Great. Let's just do a $5,000-$10,000 plan here and make sure he has that check. And that's just what it is. Sometimes it's just a funeral. There's no other burdens being left behind. Cool. We'll just do a $15,000 plan here, 20,000. But when you have the household, when you have other people in the house, you got to identify who's paying the bills. Okay, Mary, when you pass, and then once you're finished with Mary, you can apply the same concept to Steve, her husband, because hey, if Steve passes away, Mary needs a death benefit check too, because she still is going to have to pay the mortgage. She's going to have to pay the funeral and things like that. So these are the things that you talk about and discuss, right? And this is how you're going to add value during your presentation because you're building a need. Okay, you're showing them things that they never even heard before or thought of necessarily, that they probably thought of, but they didn't act or move on yet. So this is where, this part right here transitions you into showing 3 options. Okay, you can't show 3 options, 3 different premiums until you've done this well enough. So now, because I did that, I know right when I go to the 3 options now and I show her a $40,000 eagle, $30,000 eagle, $25,000 eagle, right? And now I'm going to even cement the sale even more. So say I'm showing her a whole life plan. So this is how I get into that next. So now I'm going to place you with a whole life plan, Mary. Do you know how those plans work, or would you like me to explain that to you? Right? And she's going to say, no, explain it to me. You're going to say, perfect. Whole life, the way it works is just like a savings account. Okay. Now, when you pay your premium, the money goes into the policy, just like a savings account. And that money, Mary, a portion of it goes to your cost of insurance, which is like your death benefit and the living benefits that I'll discuss in a second. But the other portion goes into your policy's savings account. It gets 3 to 5% interest every single year there. Now, the good thing about that is if you ever need to access, borrow, or pull against that money in the future, you can do that with whole life. Does that make sense, Mary? So paint the picture still, elaborate. So now 5-10 years from now, Mary, if you're in you're in a emergency and you need to tap into some funds, you're going to be happy. You have this whole life plan here that now has equity in it. You're building equity and interest as you pay into it. So it's not like you're just throwing money out the window. The money's going into an account. You're protected from a death standpoint, insurance standpoint, and your money's growing and you can access it down the road. Does that make sense, Mary? Perfect. So you have a death benefit, right? When you pass, the money stays in your family. And then this is where you loop that back into what you just discussed on the last slide. So as funeral, final expenses, or mortgage protection, or income replacement, whatever it was. Now you also have living benefits. Okay. That means if you ever become critically, chronically, terminally ill at any point, you can access 50% of your death benefit early if you need to. Now you're going to want to slow down, right? And you're going to want to, explain this. Now, Mary, if you ever become terminally ill, any bad diagnosis, medical bills to come up, mortgage needs to be paid, you're out of commission, you're going to be able to put in a claim form to the insurance company. They're going to send you a check for whatever the half of the policy is worth, as long as you have the proper medical documentation. Okay. So you're going to explain that, drill that value, and then it's level coverage. So the price will never go up. The death benefit will never go down. Okay. And so from here, you're going to show her three options. So the first option I want you to write down, Mary, is the $40,000 option. Okay. And you're going to have her grab the pen and paper again. You're going to have her write down the $40,000 option. And then you're going to have her write out different things. And especially if you're running like Americo Eagle, for example, I always have them write down. Now, Mary, write down the 40,000 first. Okay. And then beside that, like next to that, I want you to write down 80,000. Take your time here too. Like, talk slow, very punctual. Now, the 80,000, Mary, I had you write that down because if you pass in any form of accident, any accidental death, this plan will automatically pay out 80,000. Okay. And then I'm going to have them write down the 120,000 next to that for triple indemnity for travel. So, Mary, if you're on a plane, train, boat, cruise, anything where you're a ticketed passenger, this is called the common carrier rider. If you happen to pass, they'll pay out triple for whatever your death benefit is. Okay. And then also, Mary, so you got the 40, 80, 120. This is option number one. This also comes with 50% living benefits. Okay, so if you ever become terminally ill, Mary, you can access 50% of this plan early in the event that you were terminally ill. And then, Mary, I also want you to write down the 3 to 5% interest you're going to be, getting, roughly on your policy every year, your premiums that you put in. And then the last part of that is you're going to loop this into what we went over in financial inventory. Now, Mary, this is option number one. This is going to replace your income for at least 36 months. Okay. So a portion of this is going to, make sure that Steve, when you pass away, you're no longer in the house, you're no longer providing to household income. This insurance policy is going to buy Steve time and replace your income for at least 36 months or whatever the math is on option one that you ended up with. Or you're going to tie that back into the mortgage payment or the rent payment. You're either replacing someone's income, paying off the mortgage, or paying off the rent. One of the three, right? And then after you explain those things and you feel like she's on the same page with you, you're going to have her write down. Now, Mary, next to this $40,000 option, I want you to write down that 183 per month. Okay. And you're going to, have her write down the 183. And you're going to do that, right, for option 2 and 3 as well. But you added so much value. Now she knows what she's getting, what's in the household that needs to be protected. You're adding value. It's whole life, living benefits, double accidental, level coverage, triple indemnity, everything that she needs. Her granddaughter's protected. The house will be taken care of. At this point, if she's like on a level mind, she's a logical person and she's actually looking for coverage and she's has somewhat of an intent to do this, you should have them hooked on. These should be sold at this point. Okay. The only way they won't be sold is if you're picking a plan that's not in their budget. So for example, I'm only showing them 40, 30,000 and 25,000 depending on their age and their income. If they're 70 years old and they only bring in $1,200 a month and it's just for final expenses, I'm probably not going to show them a $40,000 whole life plan because it's going to be 200 whatever dollars a month. And I know they can't afford it. Make sure that you're picking the right plans. Okay. If their income says that you can recommend a 40, 30, and 20 for 183 bucks a month, 140 a month, and 103 a month, awesome. Do it. Let them pick a plan. If the need is there, they're seeing value, and it's something that's in their budget based on your financial inventory, go ahead and recommend it. But don't be afraid, like depending on income, to start with 25,000, 20,000, 15,000. It's all going to come down to the need, what they're covering, what's left over, how much coverage is there, and then making sure like, hey, I'm going to show you option number 2 next. So option number 2 is basically going to be the same as number 3. Excuse me, same as number 1, but this is going to be tier 2. This one, da 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 da. You're going to have her write down the same thing, whole life living benefits, whatever the case may be. And this one's going to be tier 2. Next tier down, it's only going to cover the mortgage for 12 months to 24 months, but at least it's going to buy Steve some time. Here's the, go ahead and write down 153 next to this one, Mary. And then option number 3, this is bottom tier 3. So this is for my people on fixed incomes, unemployment, whatever you want to say there. This is going to cover the mortgage for at least, 6 to 12 months, cover your funeral, final expenses, da 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 da. And this one's 103 a month. And then basically from there, guys, this is how you're going to close the sale. So you're going to say, you know, like I said, the insurance company, they're the ones that make the final decision. So we'll still have to submit your application here to see if at least we can get you approved. And mind you guys, that's a good gateway sentence. If you got to convince them to do the application because you need to get them approved, it means they're not sold on it yet. That's just the entry question. Now, at this point, Mary, you do have to get approved for the coverage. So if you had to choose, would you want to leave your family with the 40, the 30, or the $25,000 option? Which one is the best fit for you, you feel like? And she should be able to tell you 40, 30, or 25, right? And if she can't make a decision, pick one for her because you don't want to be like, oh, I gotta think about it. No, we're just gonna shoot for the $25,000, Mary. Let's just get your foot in the door. Make sure we have something in motion. You're approved. We get your policy packet sent out to you. And get you qualified. That way you have a policy number. And if you want to add coverage on later down the road, we can always do that. Okay. So down close if necessary. Get them to move into a decision. You don't want them to be stale at this point. You want a decision being made, right? At this point, there should be enough confidence. If they're not moving, it means that you might have not done the budget the right way. So basically from here, guys, you're going to get them to making a decision, let's get the application pushed through. And, once you get to the end of the application, the effective date is everything. So effective date comes from, this is how I say it. Now, Mary, today's August 3rd. Okay. The first premium's going to come out within the next 1 to 3 days. After that, it's going to come out on the 3rd of every month. Okay. And if they rebuttal you on that, might means that, that you didn't recommend the right program or something is coming up in their budget. You can always readjust the plan at that point. But that's how I go about the closing. So it's going to come out in the next 1 to 3 days, and it'll come out on the 3rd of every month. Where do you currently bank? So that's basically the close, guys, process from A to Z. I hope you guys enjoyed that. That's my sales process. Everyone's is different. It's it's direction, it's tonality, it's building value, it's educating, it's finding the need, it's recommending the right plan, it's adding value, and then it's moving them into a decision to buy, right? Not only to buy, but to protect their family and protect their assets. And sometimes you have to, word these processes in a way where they get that you have their best interest, and that's how basically it gets done, guys. So I appreciate you guys jumping on the training. Make sure you take notes. Follow me on Instagram. It's Scottie 3K, SCOTTIEE 3K. And if you guys ever need anything from me, you can feel free to join FFL Exclusive. We are hiring, and FFLexclusive.com, FFL Exclusive on Instagram. And I'll talk to you guys soon, guys. God bless.